The September numbers are in for the Huntsville, Alabama real estate market, but before we jump into that, make sure you hit like and subscribe below to stay on top of all of the latest Huntsville, Alabama real estate news. Let's first jump into the Huntsville market. The average sales price is up $9,000 year over year, up to $379,000. That is, however, down from the summer high, which was a high of $390,000. So that $11,000 decrease from the summer high is helping with affordability, which we'll jump into here in just a minute. Overall homes sold is flat, 623 versus 622. There has been, however, a huge increase in the number of homes on the market, 45.7% increase in the Huntsville area. 2,633 homes now on the market as of the end of September versus only 1,807 in 2023. So again, 45.7% increase, and that really brings us back to kind of 2018, 2019 numbers, which was pre-pandemic housing numbers, where we had a more balanced market, and that's what we're headed towards right now. Jumping over to the Athens market, the average sales price is up a whopping $28,000 year over year, $366,000 versus only $328,000 this time last year. Athens has really been the star of the market, where they are now hitting really Huntsville type numbers. They hit a high of $393,000 versus $390,000 of Huntsville. We are down dramatically in Athens from the summer high, down from $393,000 down to $366,000. There are fewer homes sold in the Athens market, so they are more susceptible to higher swings based on what actually sells in that marketplace. 190 homes sold versus 180, so relatively flat year over year with the number of homes sold. What hasn't been flat, just like the Huntsville market, is the number of homes on the market, a 64% increase, pushing almost 1,000 homes on the market in Athens right now, 971 versus 592. So one of our more affordable markets, the Morgan County market, the average sales price is up $27,000 up to $284 versus $257 this time last year, and they are down slightly from the summer high of $297. So Morgan County has been a popular market as home buyers are looking for affordability, and that is one of the areas that they're going to look. Overall, the market's relatively flat, 119 homes sold versus 102 this time last year. They're seeing the same thing in terms of increased number of homes sold that we saw in Athens and in Huntsville, a 49.5% increase. 486 homes in the Morgan County market versus 341 this time last year. So overall, the theme is flat other than an increased number of homes on the market. New listings is really relatively flat, 1341 versus 1325. That's only a 1.2% difference. The difference is not more homes going available on the market, it's just that homes are sitting on the market longer, which is what's increasing that inventory. Pending home sales are up, year over year, 984 versus 865, which is just this single month thing. The pending sales are definitely not up 13.8% for the year, because the closed sales are really right on last year's numbers, 1046 versus 1042. And these are September numbers. We're already seeing a slowdown in October as we're nearing the election. So I expect to see closed sales for the year to be probably a little bit lower in 2024 than they were in 2023. With homes sitting on the market longer and taking longer to sell, the days on market is increasing pretty dramatically, 43 versus 30 days this time last year, really even increasing versus last month where it was 40. I expect that trend to continue into the winter months, as we typically see days on market and inventory increase. That will likely continue to increase into November, December, January, and February. The average sales price is also relatively flat as well, 2% increase. 348 and some change this time last year versus 352.7 and some change. We are dramatically down from that summer high, which was 371,865, so down a little over $19,000, which is helping with affordability, which we'll talk about here in just a second. So one of the kind of confusing and misleading stats right now out there is that percent of list price that a listing is receiving. Typically, you want to see that number around 97% to be a kind of a balanced market. Typically, a 3% negotiation range is what you like to see to help pay for buyer's closing costs, a slight discount on the home, and those type of things. This time last year, we were 98.6%. We're at 98.3%, so slightly below what we were. However, there's a lot of data that's not really being reflected in that number. And that data is builder concessions, which is not showing up in the MLS. So if you looked at that true number, it's going to be really way south of that 98.3% because builders are kind of giving away the farm right now in terms of interest rate reductions and decorating credits and all these different things. So 98.3% would tell you, hey, we're in a seller's market. Reality, it feels more like a buyer's market with all the concessions that are being made. So with that, housing affordability is up. Prices are down off of the summer peak. Interest rates are down as well. We were south of that 100 number, which means the median household income can afford the median price range home. So 100 is what you want to be, or north of that. We've been at 91, now we're at 98. So we're close to that 100 number, which is great for our area because a lot of comparable markets across the US are nowhere close to that 100 number. So with prices coming down just a little bit, builders really focusing on affordable housing and interest rates having a little bit of relief as well, that is affecting that number. And if you factor in too some of the builder concessions where they're buying down rates, that would put you way north of that 98 number as well. So supply, of course, with all the increased inventory across Huntsville and Athens and Morgan County that we talked about, is dramatically up. It was 3.2 months. This time last year, we're up to 4.2 months, which technically is considered a balanced market. Anytime you're between 4 to 6 months, that's considered a balanced market. We were at 3.2, so that was technically considered a seller's market this time last year. So inventory is up over all of North Alabama, up 31.6%. We're looking at 3193 homes for sale this time last year. We're now over 4,200, 4,203. So we're back to those 2019, really almost 2018 numbers. So pre-pandemic numbers in terms of inventory, which is a great sign for home buyers. They now have more inventory to choose from, and they have more options to look at as well in the marketplace. So one of the big things in the marketplace right now that people track is housing affordability. And you want that score to be north of 100. We're now close to that. We're at 98 as homes have come off of their summer highs and interest rates are starting to drop. So that is increasing affordability in this area. And if you look at new construction, a lot of new builders offering incentives in terms of interest rates. If you want to know who those builders are, call Matt Curtis Real Estate, one of our Matt Curtis Real Estate agents. We can get you in touch with who has the best deals from builders right now to get you even further above that 100 score, because interest rates make a huge impact on the housing affordability index. The other thing that we're seeing out in the marketplace right now as well is townhome supply. It's really an issue right now for builders. We're seeing a 7-month worth of supply, which is a buyer's market. That's a 179.4% increase in the supply of townhomes. So if you are in the market for townhomes, they are more affordable. They are rate higher on that housing affordability index. A lot of builders are highly negotiable on these townhomes right now. We can point you to who those builders are, where some of the best deals in the marketplace for townhomes are right now. So overall, we're really in a strange market because on paper, with the average sales price increasing year over year, an average list to sales ratio of 98.3, you really want to be kind of, for an average market, see about 97%. We're north of that. That'd be more of like a indication of a seller's market. And then also what's showing is a balanced market on paper with 4.2 months worth of supply. On paper, that all points to a balance, maybe a slight seller's market, but in reality, the data is being skewed by the buyer incentives that aren't populating into this data. And so the data looks like an average market, maybe a slight seller's market, but in reality, it feels like a buyer's market, especially with all these incentives that the builders are putting out there for buyers right now, and other sellers having to compete with that and be more aggressive on their price and what they accept. But in reality, if you're a seller right now, it's going to feel like a buyer's market. If you're a buyer, it's going to feel like you have a little bit more edge in the marketplace right now. And with that, we're seeing an increase in withdrawals and expires in the marketplace as well. Sellers don't have that unique home and they're not aggressively pricing the home, or if they receive bad pricing and strategy advice from their agent, those homes are sitting on the market longer. And again, if you don't choose the right agent, who you hire matters. If they don't have a good marketing strategy, a good pricing strategy, good systems and support strategy as well, a lot of these homes are withdrawing and expiring from the marketplace right now. And if that's you, we love being your second choice. We love coming in and helping sellers who weren't successful the first time find hope and also a strategy to get their home sold and move on to the next stage of your life, whether it be moving across town or moving across country. We like to do that for sellers, and you can give us a call at 256-333-MOVE. We'd love to help you out.